Welcome back. Morale among South African consumers is steadily improving. The FNB BER sentiment indicator edged up to -12 in the second quarter from -17 in the previous quarter. Sentiment improved as consumers enjoyed fewer hours of load shedding, lower food and fuel prices. Joining me as we unpack the state of the local consumer is senior economist at FNB, Koketso Mano. Koketso, thanks so much for joining us today. Now let's contextualize the numbers. As mentioned, consumer morale improving in the second quarter, clearly showing that we are moving in the right direction.
Most definitely. I mean, we've seen that improvement coming through. The index is currently sitting at -12. So it still suggests that, consumers are broadly pessimistic, but we are still seeing that improvement, which is the highest, the latest reading is the highest in 18 months. So there is that improvement that's taking shape. And as you rightfully mentioned, I mean, it's a combination of lower fuel prices, especially going into the month of June. It would have also been a factor of higher SRD grants, following the budget and the increases that were implemented in April. So those are also contributing, and we generally have lower inflation in South Africa. So that would be something that's supportive of consumer sentiment.
Interestingly, there's been an improvement in the time to buy durable goods sub-index. These items are usually bought on credit. And considering that, interest rates are still at such elevated levels, would this not necessarily be a cause of concern?
I think what we should also remember is, yes, there is an improvement on one hand, but on the other hand, it doesn't mean that it's an outright, I'm going out tomorrow, I'm going to buy a car, I'm going to buy a house. As I said at the start, I mean, consumers remain relatively pessimistic if you look at the index and it being below zero. But you could say that improvement is showing that, consumers are seeing their own finances especially improving, especially with lower interest rates, lower inflation expected to come through at least before the end of this year. So that will be something that pushes confidence or supports confidence. But whether it would actually translate into spending quite immediately, I don't think we're quite there yet. And I think the other thing to pull out of the data is there's a divergence, right? If you look at the different subcategories, think about, and I mean in terms of income groups, right? So they define anyone who's the lower end to be anyone earning less than 5,000 Rand per month. Then the middle income group is somewhere between 5,000 and 20,000 Rand a month. And then the high income group is beyond that. So it's broadly your lower end and your middle income groups that are showing you this improvement in confidence, right? So once again, it speaks to lower inflation, the things that really hard hit people who are either in the lower end or in the middle income group. Lower food inflation, lower petrol prices. So those are the things that I think will be really coming through in these themes. But when you look at the higher end, so people earning more than 20,000 Rand a month, those remain relatively pessimistic. I mean, if you think about the fact that this survey was taken just after the announcement of the elections, so there was still that political uncertainty. I mean, it's still there, but there was still that political uncertainty at that time, which would have had a bearing on people in the higher end. And those are the people with the financial muscle to actually go out and participate more actively into the market. So we're still seeing those people being in a wait and see type of mode, but we're hopeful that as the third quarter and the political uncertainty subsides, we will start to see those improvements coming through.
So all in all, what we are getting here is that, we're still in negative territory, even though we are improving. Things aren't really getting any better. And I guess it's also just showing that the macro environment is also still downbeat. We have low levels of growth, high unemployment levels. Just earlier this week, we got those employment numbers showing that both full-time and part-time employment declined further. I think we shared about 74,000 jobs during the first quarter. Is this just another case showing that we're dealing with a consumer that has limited resources and that can't really get themselves out of this position, considering that macro kind of environment?
Most definitely, the macro environment has a huge bearing on how consumers are feeling at the moment. We've already mentioned a few aspects of inflation, and you so rightfully mentioned all the other real economy constraints. And I think the other real big factor to pull out is that interest rates remain at very high levels. I mean, compared to where we've been before the pandemic, and even during the lockdowns, so people are still feeling that strain if they've made financial commitments during that time when interest rates were at an ultra low. Those consumers are still battling with, elevated interest rates. And unfortunately, we really haven't seen that stern shift towards more accommodative monetary policy. And in fact, we only expect the central bank to cut interest rates just to make monetary policy neutral, so it will not be really supportive of the economy or really restrictive of the economy. So that's something that consumers are probably keeping in mind. But I think going back, because I only explained what's happening in the subcategories when you look at the income groups.
Yes.
But if you look at what you asked me before about the timing of buying durable goods. When you look at the other subcomponents, right, you will see that the consumer is less pessimistic about their own personal finances. So there they have a good outlook when it comes to household finances. It could be a combination of my wages are maybe going to start keeping up with inflation as inflation comes down, those expectations of interest rates coming down. But personally, consumers seem to be less concerned about their finances. It's the economic situation that they're really concerned about. So that's what you're talking to here, that the real economy is not really supportive. But as I said, in the outlook, we are hopeful that things are moving in the right direction and things will start to improve over the forecast period.
Koki, those that household finances index, is it just reflective of what's happening across the board, or are you seeing it? Are you seeing the lower to middle income earners more less pessimistic, whereas the higher income earners are a bit more pessimistic, or is it just an overall overview of everything taking place?
Yeah, so if you look at the index, especially the past few readings, you will see that there is that divergence between how consumers feel about their own personal finances versus how they feel about the economy at large. So it would be more of that theme that I'm trying to pull out, that consumers are not necessarily, very pessimistic about their own personal finances and their own ability to make things work. But it's broadly how the real economy is working in their favor. And I don't think that's really coming through in terms of their expectations or their perceptions.
I mean, you mentioned this at the top, that we also had that national election taking place. The print didn't necessarily account to what played out when we saw the GNU agreement being signed, and we saw a whole lot of optimism after that. The Rand spurred, we saw equities also just rallying. That has kind of somewhat subsided as we await that cabinet announcement. Moving ahead, if things remain intact on the political front, do we expect to see even further improvement in the third quarter, in the fourth quarter?
Yeah. So, and by intact, I mean like moving in the right direction.
Yes.
Yes. So that is a very important fundamental, right? I think a lot of economic agents are in a wait-and-see mode. And we saw after the elections, or after the announcement of the GNU, rather, or the proposed GNU, that the markets responded very positively. But this delay is probably highlighting that could there be very fundamental ideological differences here. And I think that's why maybe there are a bit of jitters in terms of, is this GNU in its formation going to be stable, right? So that's the clues that everybody is looking forward to. But putting that aside and understanding that there is probably going to be a bit of fluidity going into the third quarter until all of this settles, we still saw from the business confidence index, and we discussed it when we discussed employment, that a lot of the investment, even demand, was broadly put delayed, waiting to see how the political outcomes would pan out. What was also interesting to us is that when we look at our FNB estate agent survey, it also showed us that, estate agents are reporting that, people are a bit concerned about how the elections are going to play out. And as I said, in terms of the different income groups, with the high income groups who have the financial muscle, who could more meaningfully participate in the property market, there is that expectation that is probably going to happen once this confidence boost comes through. So that's what we're speaking to in terms of if this GNU does come out very positively and it does stabilize, it could be something that boosts not only confidence, but we're also hopeful that it also means that there's real economic gains in terms of investment, in terms of spending, in terms of participation in property markets and the likes. So yes, going forward, if things remain intact, we should see improved economic outcomes from the third quarter onwards. But it is very important that we see this GNU as a stable, in a stable way, so that that can also support the view that people have about the state and its capacity to, really support personal finances, economic finances on a broader basis. And I think that's when we will really start to see sustained improvement.
Clearly still a lot of risks at play and a lot that can still influence sentiment amongst consumers. Koki, thanks so much for joining us today and just unpacking that print for us. That was Senior Economist at FNB, Koketso Mano.